This is your technical update from the LMAX Exchange Research and Analytics Desk for Tuesday, June 23rd, 2015. So the Euro rally has stalled out ahead of critical resistance at 1467, and this latest topside failure suggests the market could be poised for a bearish resumption back towards recent lows at 108.19, which guard against the multi-year low from earlier this year in March at 104.62. Really, only a break back above 114.67 would take the pressure off the downside. Sterling dollar. So cable had a nice run up to fresh 2015 highs towards 159.30 before stalling out in recent trade and rolling back over. The market has stalled out ahead of critical psychological barriers at 160. It could now be poised for deeper setbacks back towards some previous resistance in the 155.50 area. Dollar yen. So dollar yen continues to be very well supported on dips, with the market locked within a very intense uptrend. However, longer term studies still are correcting from overbought, and there is a possibility of seeing more consolidation and setbacks towards the 122 area before the market ultimately looks for a legitimate bullish resumption. At this point, only a close below 122 would give reason for concern on a short-term basis, while inability to do so will keep the pressure on the top side for an eventual move back towards that recent multi-year high at 125.85. Euro Swiss. So setbacks in Euro Swiss continue to be very well supported in the 104 area, and it looks like the market could be looking to carve out a higher low ahead of the next major upside extension. A break above 105.75 will confirm and expose a retest of the February peak at 108.15. Aussie dollar. So Aussie dollar remains locked within a bearish downtrend, and the market has been consolidating over the past several weeks. At this point, recent highs at 78.49 look to be capping gains, and the market could now be poised for a retest of the multi-year low from earlier this year at 75.33. A break below 75.33 would open the next major downside extension in this market towards 70 further down. Only back above 78.49 would take the immediate pressure off the downside. Dollar CAD. So dollar CAD remains very constructive, and recent setbacks have been very well supported in the 120-125 area ahead of this latest push higher. Look for a break back above recent highs that we saw going back to the 1st of June, which come in at 25.63 to confirm and accelerate gains back towards the 2015 peak at 28.35 further up. At this point, only a break and close back below 21.25 would compromise the bullish outlook. Kiwi dollar. So Kiwi continues to extend declines, with the market breaking to another 2015 low and now approaching next key figure support in the 68 area. At this point, any rally should be very well capped, with 72.32 coming in as the key resistance point on a short-term basis. At this, looking for deeper setbacks now below 68 will expose a measured move downside extension towards the 65 area. Only back above 72.32 will take the pressure off the downside. SPX 500. So although we've seen the market rally in recent trade, it still remains well capped below the recent record high for May at 21.37. At this point, a break and close above 21.37 will be required to open the door for a fresh push higher, while inability to do so will keep this toppish structure intact and the toppish outlook intact in favor of a bearish reversal. A break and close back below 2100 will help to confirm, while ultimately a break below 2040 is required to confirm the toppish outlook and accelerate declines. Gold. So although we've seen setbacks in recent trade, the market continues to be very well supported in the 1170 area. Only a break and close below 1170 would open the door for a retest of that 2014 base at 1131. Inability to close below 1170 will keep the pressure on the top side and the prospect for a longer term base in favor of fresh upside over the coming days and weeks. A break back above 1232, however, will be required to strengthen this outlook and accelerate gains back above 1300.